Hi everybody, Alex here from Expert Forex, and in today's video I'm going to show you how to create wealth by learning a very simple and easy trading technique. So this is a follow-on from this particular video that's on your screen right now. If you have not watched this video, please go and watch it first. It explains the technique in a lot of detail. The technique does not use direction. You don't need to know which direction the market is moving. That's what's so fantastic about it. And there it is. Please go and watch this video, because this is a follow-on to this video, and in this one I'm going to take a slightly different approach. So in the previous video I explained how the standard deviation indicator works and how you trade it. So in this video I'm going to show you a little bit more about what the indicator does and why it is so successful. I'm going to show you how to create the indicator and then save it for future use. Then we're going to look at how to automate some aspects of this fantastic technique, and then I'm going to show you how you can be kept up to date about the development of this technique and the fantastic tools that get developed in the process. Don't run away when you see these mathematical things, but this basically explains how the technique works. Once you've got this central line, the tool works out deviations from there. So there are basically, in this case, 1 deviation, 2 deviations, 3 deviations. And this applies not only to trading, but to a whole lot of other things, where it says statistically, when you have the middle line established, then price action will mainly happen 1 standard deviation away from that middle line. So you don't have to worry about having to calculate anything that's already done for you. And then 95, now 95 is a big number of the price action will happen within 2 standard deviations of the line, and then 99.7% of price action will happen between those, the next deviation, which is the 3rd deviation. So let me show you this on a chart. Okay, so there we have the previous illustration. So here you see it on a chart. So there is the midline, the green line is the midline. So what we're saying is 68% of the price action will happen in this blue area that you see here. And then 95% of the price action will happen in this area, the blue area and this pink area that you see here. And then 99% of the price action will happen in this 3rd area, the combined 3rd area. So it's not that complicated, and on the screen you can see that the price actually never went into these pink ones. It never did get to the 90% level, which is the whole point. There is, if you know this information, you know where the price action is going to be captured, and then your trading techniques can deal with those, because all you do is when it hits one of those, you trade from there back to the midline. Trade from there back to the midline, trade from there back to the midline, trade from there. If it doesn't go back to the midline, you trade the next touch and it will go back to the midline. So the midline calculation is important, and it's all done for you. So this is how this trading technique works. It is so easy. You don't have to think. Everything's calculated for you. All that needs to happen is that you trade when the price hits the first deviation, but you trade back to the center line. Once you've got that center line in place, boy, things become. So how do you set this indicator up? It's a free indicator that is on MetaTrader 4 and 5. So I'm going to show you how to set it up if you are trading manually. And after I've shown you, it should look something like this. It will have a midline, it will have the 1st deviation, the 2nd deviation, and the 3rd deviation. Okay, so let's go right into it. On your screen you can see a daily chart of the Aussie New Zealand, and there it is. In fact, the same chart that I showed earlier, and this is a blank one, so we're going to be working with this one. Okay, so let's start setting it up. I'm going to set the indicator up for as much as we can see on the chart. Now, it's not quite a year, it's pretty close to a year, but let's set it up. So what I do is I go to Insert, Channels, Standard Deviation. I start at the end here, and I pull it to where I want it to end, which is over there. And there I have a standard deviation level. So what I'm going to do now is I go in, this is not an indicator, this is an object. So I go into object, I activate it, and I say edit. And let's have a look. The colors I used were red, so I'll go red, or maybe that's doesn't really matter. That's red, and I will keep it a thin one. And then we go to parameters. I like raise, and I'll show you later why I do. And I'm going to set this for the first deviation. So it's one deviation away. So now we're going to see the chart changed slightly. So we go, okay. All right, so there's our first standard deviation line. Now, it doesn't look like the one that I've shown you, but now the trick is you've got to add more of the same ones to the chart. So I go in again, I go insert, I say channels, I say standard deviation, I start over there, pull it all the way to the end, and there we are. They're virtually on top of each other, these two. And so I go into objects. Now I know that's the last one I created. I activate it, I edit it, and I make that 2. And in our example, we used blue, so I'll change this to blue, something like that. And we say, okay. So now we have the 1 deviation line and we have the 2 deviation line. So we just add the next one. So we go close, do exactly the same thing. We go insert, channel standard deviation. We start over here and we go all the way right to the end. And you'll see all of the that center line almost falls on top of each other. We then go and change the settings, and this one is a green one. So we say object line, activated, edit, and this is green, which is most probably that one there. And we go parameters, and we say, all right, we want 3. And we say, okay, so there are the 3 lines created. There's the indicator created for you, and we've done a lot of work. So what we do is we save this one. So what I do is I go right click. I'll create a template, and I say save template. Now there is already the template that I saved, so I'm going to just save this over the previous one. So this is template standard deviation 1, 2, 3 templates. I say yes, save. It's going to say we already have it, so I say yes, save over it, and now we have our template. So what we can do now is we can change the time frame, and I'm going to change the time frame. It's going to be quite interesting. I'm going to change the time frame, and I'm also going to, you can change the currency now. So whenever you use this template on another chart, and let's just do that. Let's just say, let's open a yen chart, and we say, all right, now load the template. You will see those lines, and then change it to daily because that looks weird, and not like that. So there are the lines on the yen, for instance. The yen recently broke out of the 2nd level and almost touched the 3rd level. There's an extreme trend that just recently happened, but most of the price action happened in the first deviation there. So that's how you change the currency. The other thing is and which will be quite interesting for you to see, is that if you look at this daily chart here and we change it to a 4-hour chart, and I'm going to do that, and we make it small so that it fits more or less the same size, it doesn't change. These lines do not change. So they are not dependent on the time frame. They are dependent on the time that you use to draw them. That's a very interesting point here. Time frame doesn't change the deviations. It's the look back period, the period from when you've started, which is over there, back to, let's say, a year ago. That is what determines those lines. Okay, so that's been my first objective, is just to show you firstly how to create the multiple standard deviation channels, and then to save it as a template that you can use over and over and over again. Okay, so you've seen that more or less the template was exactly as shown on the screen. I think this one used a slightly smaller look back period, but that is how you do it. And it doesn't really matter. The center line doesn't change. You know, people say, oh, this is a repainting indicator. It doesn't matter. It doesn't change much as time moves on. The biggest thing here is, and we're going to look at that in future videos, is how to change those time frames to make it a scalping time frame. So you only look back 1 week, and based on the 1 week, you can create a template that you can use for scalping, or like this one, we want to use it for swing trading. Now, some traders take it even further. They actually create half deviation lines. So you have your mean, which is over there. Then you have a half deviation, a 1 deviation, 1.5, 2, 2.5, and 3. That actually creates more trading opportunities because more of the trading is concentrated around the middle line using that particular one. Like over there, recently, there's a lot of trading happening within the first deviation, so they capture a lot more transactions. So this is my template number 2. Okay, so we've got quite a few automation plans ahead. We're going to firstly do a table of all the trading instruments that show the mean line and the standard deviations from the mean line. And that will give us an idea of the risks of trading various instruments by knowing the width of that big channel. Some currencies have a very small width of only 300 pips. Others have a very big width of in the thousands. So you need to know that information to get an idea of where you can capture 70% of the trading. That is an important bit of information that you need. The other thing is that we're going to create downloadable indicators, a lot more flexibility. You can tell it how many levels you want, and you can tell it how far back the look back period should be. So a lot more flexibility. You can use this indicator to do scalping or swing trading very quickly because you just load it on the chart and tell it what you want it to do. None of the manual stuff that we did today. And then the next extension obviously is a self-trading robot that will just trade these trades. When it touches a deviation line, it will trade back to the center line. Okay, so we've covered all the points here mentioned, explain how it works, how to create it. We've done that. Discussions about automation. And then the last one is how can you be kept up to date with developments. So in the description of this video and in the first commentary of the video, there will be a link where you can click on and you can start participating in the standard deviation trading. The first thing that you'll be able to download are those 2 templates that I've mentioned before. Those are fantastic templates. You could just download those ones, and we're going to keep you up to date about the automation aspect where we're going to be developing those various indicators and the automation of this particular EA. So just click on the link that's provided in the description and in the first commentary, and you will be given that opportunity. Now, I hope you've learned a bit from this video. Please, if you haven't watched that the previous video, please go and watch it. There will be another follow-up video which goes into the trading in a lot more detail. So from me, Alex Deploy, cheerio.